The European Union, which is the largest trading partner of Israel, has called for suspension of free trade with Israel, citing Jerusalem's illegal West Bank settlement plans, Gaza, and attempts to undermine the two-state solution. Israel, on the other hand, has signed a bilateral investment agreement with India to expand mutual trade, which aims to boost trade and investment flows between the both countries, particularly in cybersecurity, defense, innovation, and high technology. This comes at a time when the Israeli economy is suffering from a slump in its GDP, a cost that the country has to pay as it wages a prolonged multi-front war. As a result, the citizens are forced to cope with higher taxes and increased cost of living. To discuss all this and more, joining me on the show is Dr. Shmuel Abramson, who is the Chief Economist, Israeli Ministry of Finance. Thank you very much for speaking to me, Dr. Abramson.
Thank you. Good afternoon from Jerusalem. Hello.
Now, you were in Delhi very recently, and as part of the delegation that was led by the Israeli Finance Minister, Bezalel Smotrich, to sign the bilateral investment agreement with India. How does this agreement benefit both countries?
So this is indeed a very exciting milestone in the economic relations between the two countries. This agreement creates stability and clarity for investors from both sides, for an Indian investor that wants to come to Israel and an Israeli investor that wants to come to India. It's basically a statement, a very strong legal statement that both countries adhere to norms that will protect each other's rights and judicial procedure that can make them maintain their rights. So it's very, very important to create this environment for them. What we expect is that this agreement will also increase investments de facto. We're talking about a lot of opportunities, but I'm happy to elaborate.
Right. Now, I do want to understand from you that which are these key sectors where there is a potential for Israeli companies to invest in India, and which are the sectors where Indian companies can invest heavily in Israel?
So we'll start with perhaps the second, the Indian opportunities in Israel. There's several of them, but I would say perhaps the biggest one is infrastructure sector. We're very, very much interested in Indian companies coming and investing in Israeli infrastructure. We have one big example of an Indian company, the Adani Group, holding a port in Haifa, which is basically a gateway to Europe, could be a gateway for India to Europe. But there's also a lot of new other opportunities with our population growing, the economy growing, a lot of infrastructure needs. We're building a metro in Tel Aviv, one of the biggest infrastructure projects in the world in the next few years. And there's a lot of room for Indian companies, including with your experience building metros in India. And we've just visited the one in Mumbai. So there's a lot of opportunity for there. There's also opportunities in financial sectors. India has had very interesting advancement in its fintech sector and financial sector. Our minister also visited the gift city, and we're very much interested in India's presence in the financial sector. So I would say these are the main ones, but of course there's many other areas, clean air, energy, and other high-tech sectors. In terms of Israel's opportunities in India, so there's many also. I would say everything that's connected to technological advanced manufacturing and other kind of technologies. Israel, as you might know, is one of the leading technological countries in the world. There is the leading country in R&D as percent of GDP. And we would like to basically combine and make these connections between our R&D and mines and Indian manufacturing and providing these technologies to India. So we would like to see investments from Israel into India that are connected to technology.
All right. Now, looking forward, there is an investment pact that has been signed. What are the next steps in India-Israel economic ties?
So there's a few things that we've also agreed to work on together in this meeting. We want to increase and improve credit lines for exporters from both countries to make the credit and the risk to be lower and cheaper. So that's one avenue that we're looking at. Another thing that was discussed during this visit is the connection of UPI, the Indian payment system, to the Israeli system. It could be a very, very exciting advancement. It could provide Indian workers in Israel with services locally, and could provide services for Israelis and so forth. These are the direct issues that were discussed. But I would say that we all understand that perhaps the biggest and largest potential advantage is free trade agreement, and we're currently at a pre-negotiation phase. I would say there's internal discussions, but we did not yet announce an official negotiation. But I hope that in the near future we'll also hear about that.
Right, absolutely. Now, India, when it does bilateral trade and in the subcontinent and even in Asia for that matter, and with Russia, there has been local currency that has been used between the two countries in bilateral trade. Is there a potential of India and Israel also looking at this model?
Excuse me, I didn't hear you
when
well.
you talk about local currency, you know, like a rupee ruble exchange, rupee ruble trade for that matter, even a number of countries in the ASEAN group where India has moved forward with trade happening in their local currency vis-a-vis using the dollar. Do you think there is potential for India and Israel to also do trade in shekel rupee exchange?
Well, first of all, as I said, if we connect the UPI system to Israel, that it will of course increase the activity in rupee, also for activity in Israel. So there is some potential there. I do think we all understand that currently the US dollar is, this is the system we're living in, is the main currency. And I think in the foreseen future, we definitely believe in the US dollar. I'm not aware of any other special opportunities in trading with these currencies. There's other risks that are related to that. So this is as far as I'm aware.
I do want to understand from you, which are these sectors where Israel can help India in bolstering its Make in India initiative?
Yes. So first of all, already today in the defense industries, there's several initiatives that actually manufacture in India with Israeli technologies, but also in other civilian sectors. We're talking about agriculture, agri-tech, manufacturing. So Israel, there's actually already Israeli companies that manufacture in India. We're very, very happy and comfortable with the Make in India because we are a small country, not a manufacturing hub. And India, with its scale, can definitely be a good place in order to manufacture our technologies. I mentioned agriculture, but same for other kinds of technologies. You can talk about clean tech. You can talk about other smart manufacturing. So we're very, very open and happy about that.
Moving on to the war that Israel has engaged in for over 2 years now, how do you think the war with Hamas has impacted the Israeli economy?
So, of course, unfortunately, a war like this has an impact on the economy. It's very, very natural and expected. And it had a toll. It had a toll on our GDP that was lower than we expected. This is the main figure that we look at. Other than that, in fact, the economy is doing surprisingly well. Our unemployment is at lowest levels on record. Our currency actually became stronger than before the war. The stock markets have been soaring, roughly 70% and so forth. So we do see very strong investor confidence despite the war. But of course, naturally, we need to allocate resources to this unfortunate situation. Our the deficits were higher than we hoped for. So this year we'll be ending the year at around 5% GDP deficit. And our debt to GDP also climbed. That said, we're doing it, we think, in a balanced way and still maintaining as much as we can a low increase in our debt.
Okay. I do want to understand from you what are the direct and indirect costs of fighting the war by Israel on multiple fronts?
Yes. So there's two ways of talking about these costs. There's the cost of GDP, and there's the cost of allocating money from the government, from taxpayers' money in order to finance this war. The figures that we were been talking about, are roughly, if I put it into equivalent, roughly 15% of GDP, but that is over a span of more than 2 years. So we could talk about 5 to 6% annually that is allocated. It's something that, of course, is unfortunate. It causes a burden on the people. It will entail increasing the taxes. But in the medium and the long run, we're certain that we can weather this. And this is what also the investors show us. We're able to finance these needs at good and fairly comfortable interest rates. So we are optimistic that once the war ends, and hopefully soon, that the economy is going to rebound very, very strong.
I would like to understand from you what percentage of the budgetary allocation has been reserved to fund the war, and how much of it has increased since 2023 October?
So, it's a bit more complicated than that to really earmark every expenditure that is connected to the war. Some of the costs are actually lower revenues, of course, because lower activity, and some of them are of course, increased expenditures. But I would say that in terms of budget allocation, we would be closer to the, I would say, 10% of GDP. That would be roughly the cost. You can see our debt to GDP increase in about 10 percentage points. So this is kind of the area. Most of it, of course, is defense expenditures, but there is also civilian expenditures, unfortunately, related also to this, and there is a burden. We have communities that have been hurt very much by the horrible terror attacks of October 7th, and there's costs also for rebuilding them. This is one area that we're investing in.
Right. Now, how equipped is the Israeli government in its ability to absorb these increased costs to fund the war?
So as I said, we're very happy to say that we've received very considerable investor confidence, and we were able to finance these needs in a comfortable and smooth way without a substantial increase in the interest rate. So currently we're financing our debt in local currency, in shekel, not very differently in terms of interest rates from before the war. Of course, there's an increase in the risk premium, especially we see it when we look at the cost of abroad, but it is definitely manageable, and we are happy to say that we can absorb it smoothly.
Right. All right. Now, there are a number of nations in Europe particularly that have, threatened to break ties with Israel, particularly when it comes to economic relations, when it comes to the free trade agreement. How is the Israeli government planning to cope up in wake of these increased strains in its relations with a number of these countries, whether it's Germany, UK, France, and Canada?
Yeah, so not all the countries you mentioned are actually in the same category, and unfortunately there are some countries that have been more critical about Israel, and also, as you said, expressed these negative sentiment. We hope it's a temporary sentiment, and we hope that as soon as the war ends, and sooner than later, then things will be restored. There's definitely a political sentiment, and unfortunately, as we see all over the world, there's a combination between economics and geopolitics. So we see it with other countries, and unfortunately, India is also experiencing some of this dynamics. It's an unfortunate dynamic, and I hope it's going to be temporary and resolved. In the meantime, we're also building good ties with some of our allies and friends, such as India.
Right, absolutely. And talking about higher taxes, increased cost of living, the GDP is reducing, there's inflation because of the war. Now, these are obviously the repercussions that a country has to face when waging a war. And this has been prolonged for 2 years now, over 2 years. What is the expectation? How soon can the Israeli economy recover, and what are the measures that are being taken by the finance ministry to do that?
Okay, so we believe that as soon as the war ends, we will see a very substantial bounce back. We've seen that in history, in Israel's history. This is not the first time war and more, unfortunately, and we had other kinds of crises, global crises such as COVID and so forth. And what we've seen each time was that the economy is able to bounce back and in many ways compensate also for these periods. So we would expect strong growth afterward. All the things you mentioned are indeed correct. There has been a burden, as I said, but we tried, and I believe we succeeded, to manage them in a balanced way. We did increase taxes. We had to. We believed it was important in order to create fiscal stability. But as soon as we're going to be able to, we will also work on lowering the taxes back.
All right. On that note, thank you very much, Dr. Abramson, for speaking to me on the channel.
Thank you very much. A pleasure to talk.
Well, with that, it's a wrap on this show, and stay tuned for more news and updates on the other side.